holy stuff. All right. So I believe the market moves algorithmically. Okay. I believe there's an algorithm that sets the tone for the market. Now, let me explain. Do you guys believe that the market, each move up and down, is made by a trader buying and selling? Do you guys think the market moves like that? You guys can respond yes or no. If you guys can, I'll bring somebody up on stage so that you guys can talk. Have a representative to talk. Do you guys believe so? Because I don't. And I'll tell you why I don't believe so. Think of it like this. The stock market is a wave, or is an ocean. It's an ocean. It's an ocean. Okay? Now, the algorithm is what creates this wave. Let's say you're a surfer. You want to ride some waves. So what do? You look for some waves. You look for volatility, essentially. You look for moves up and down. Who creates those waves is not another surfer. It's not. Listen, it's an algorithm. Why? Because if this market was solely done one-to-one, one buyer, one seller, you would have extreme moves 24/7, and then you have massive drops of volatility for weeks. That doesn't exist though. Because what we end up happening here, what we have here is a consistent market that repeats itself. Order blocks, fair value gaps, breaker blocks. Now, people use the excuse on me. Hey, no, that's just the same buyer buying at that price point. So you're telling me that same buyer is looking at every single fucking fair value gap and buying at that fair value gap? Are you being serious right now? It's bullshit. Price is booked algorithmically to liquidity points. Okay? So a lot of you guys say, hey, Halo, how do the banks trade? Or how do banks get filled in orders when it comes to indices? Very simple. I'll show you right now. This is a stock market, right? Boom. This entire move up and down was created algorithmically. And at this level of liquidity is where banks enter longs or short positions to either pump the stock back up and the algorithm sends it back up higher, or to dump it back down like this. Do you understand what I'm trying to say now? Banks trade from liquidity to liquidity. They do not trade off of random price points. They trade off of important levels of liquidity. Now, in terms of, let's go to a random ass pair. In terms of liquidity, let's draw it out. What is liquidity? Thank you, AUDJP, because it's very obvious now. Every high you see, every obvious high is a level of liquidity. Every obvious high, every obvious low here, this low here. These are all levels of liquidity that you guys need to use. All of them are levels of liquidity. Now, how do we graph out liquidity? Well, I recommend going on higher time frames and then graphing out these obvious lows and obvious highs. So in this case, this is level of liquidity right here. This is a level of liquidity right here. And yes, this is also level of liquidity, but if it comes down here, it's going to come down to this one, most likely. These are all levels of liquidity, okay? So with that being said, how do we trade liquidity? Well, it's very simple. When price crosses a higher time frame level of liquidity, let's say in the hourly or the 4 hour, if you see a change in structure, meaning a market structure shift, meaning maybe we close under both these imbalances, or if we go to the 4 hour chart, we close under this imbalance right here, Guess what? If we do this, it is officially bearish. Do you guys understand? When we sweep liquidity and we change market structure and we invalidate fair value gaps and we turn them into inverse fair value gaps, what happens? Anybody here know what happens? Do we still become bullish or do we become bearish? Type in the main stage chat. Do we become bullish or do we become bearish? Exactly. We become bearish. So liquidity allows you to go ahead and structure the next thing, bias. How? If it wasn't for liquidity, right, you wouldn't have a bias. You would be entering the market, praying to fucking God that you're right, praying to Jesus that you're right, and if you're wrong, you're fucked. Prime example, look at this. We have, for example, let's say, right, buy side. And here we have sell side got swept. And we had a pump up and we didn't print a lower low. Right? No lower low. Correct? Am I right? Okay. If this high wasn't here, how would we know where price is going? Hell, even if we took up this low, I'll be like, fuck it, we're so bearish because I think we have more downside because I'm an arrogant fuck. Liquidity gives you bias because it's where the draw is. You can see it on how the candles form. Look at these massive ass volume candles. These full candles. These full like this is exactly what I'm talking about. This for you indicates what you should be looking at. Full volume candles where? To the buy side. Okay, I am bullish till when to buy side gets swept. And then what? If we displace lower, then I become bearish. For example, let me show you right now on ES. This is very important. Let's look at ES. Let's go to ES on the daily time frame. Let's do this off. Or honestly, I should leave it on, but fuck it, I'll turn it off. ES, this one, right? Off. Let's do replay and let's forget about these candles right here. Okay? What do you guys see happening right now? What do you see happening right now? What's price doing at this point? Huh? What's it doing? You guys can answer. Go ahead. I don't bite. Moving up. HUDs. Be honest with me. Would you be bearish right now? Why? Why would you not be bearish, HUDs? Why wouldn't you be bearish? Okay. There you go. It's very close to the line of liquidity. It wants to tap the line of liquidity. It wants to go higher. That's it. Simple as that. If it wasn't for this high, you guys would be like, oh, I'm going to short this here, long this here, short this. No, you're not going to be doing shit. You wait for that level of liquidity to get tapped and then you short and long depending on that level of liquidity. If there's a reaction off that level of liquidity, okay, I'll short it. If there's no reaction and it wants to go higher, then it wants to keep on pumping, okay, then I won't touch shit. I won't touch jack shit. I'll let it go do its thing. Okay? So for right now, I'm bullish. Motherfucker, guys, listen. Prime example. Since Wednesday of December 13th, when I saw this high getting cleared and held, I said we're targeting this high. I'm bullish to this high. I'm bullish to the high. I don't care. I'm bullish to the high. I'm not playing shorts. Why? Because there's no point of shorting something that's obviously going to go higher. It's going to fake everybody out. It's going to go higher. Clear draw and liquidity. Clear draw. So some of you guys might have trouble finding this clear draw early on, and that's okay because it is difficult early on. So what I recommend is do this on a lower time frame, on the 4 hour, on the 1 hour, and so on. So let me show you right now how this looks like, right? Let's go on the 1 hour perhaps. Right? In this case, okay, we have MES. Beautiful. We have this obvious sell side, and then we have this obvious buy side. Okay, Halo, what do I do here? Well, we're in a range right now on the hourly chart. I'm not going to touch longs or shorts until we take out one of these highs. Okay, let's see how that go, Halo. All right, let's go. All right. Good. Not touching shit. Okay, we swept. Are we continuing lower or are we going to go higher? We didn't immediately have a reaction and we're closing full body candles above, so we're probably going to go higher. All right, I'm still bullish to the buy side. Why? Why am I not bearish off of this internal sweep of liquidity? Why? Because buy side's the target. Let's let price play out. I'm not bearish. Sweep of liquidity. So we swept liquidity. You could have maybe found a lower time frame entry if you really were patient enough, right? But we're bullish because buy side is still above us. No matter how much sell side we have internally on the lower time frame we have here, we're still gonna go higher because buy side is the absolute draw on liquidity, bro. That is the level of liquidity you need to get. That buy side level. It's the most important. It's the most important. It's the highest time frame. We need that level of liquidity before we see anything else. Guys, again, I've said it multiple times and I'm going to mention it again. And I'm always going to repeat it all over and over again. Okay? Higher time frame has more power. The higher the time frame, the more likely it is to play out. Do you guys understand? Do you guys understand? Beer Pirate wants to come up and speak. Let's see what Beer Pirate has to say. Come on, Beer Pirate. What do you got? Talk to me. Beer Pirate, come up on stage. I invited you. So we got somebody typing in the chat. 1 second. Give me some time. So how will you trade that off? The hourly? No. So the higher time frame that you see right now, Andy, it is, we swept this buy side, this internal buy side, but we didn't displace because buy side's still above. We still have buy side above that we need to attack. So in this case, I would wait to see for an entry somewhere in this area to then go long to this buy side up here. That's what I would do. I would wait to see a long entry off somewhere here to then go long all the way up to this buy side up here. That's what I'll do. It's one that makes the most sense to me because there's no point of longing this at this high because you're gonna get fucked. Long at the rebalance when we chop and then we see a market structure back to the upside. That's when you see long. You get me? All right. So, with that being said, let me show you guys an example on how to structure bias. All right. So you guys understand the basic level. Is there any questions regarding liquidity at all? Higher time frame works the best. You structure from the weekly to the daily to the 4 hour to the 1 hour to the 30-minute, 15, and that's it. You stop at the 15-minute. I'm gonna show you guys an example right now. But anybody confused on this so far? We're all good here so far. We're all good on liquidity. Let's go to live examples. Show you guys here. Let's go here. Let's go on bar replay, but let's go on bar replay from a while back. Let's do this here. Okay. So what do we got here? All right. Oh, look who's finally speaker. Okay.
Yeah, hey, sorry. I couldn't accept on my phone for some reason, but I was going to ask you, do the higher time frames abide by like FEGs or imbalances or whatever of the lower time frames too?
What happened?
Like the higher time frames. Say you got like an FVG on the 1 minute, right? Does the 5 minute respect that? The 5 minute time frame?
So like so you said if we have an FVG on the 1 minute, correct?
Sure, yeah.
And if the lower time frame respects it, is that what you said?
If the higher time frame will respect the lower time frame.
So not okay. So this is how it works. Remember, you always need to prioritize the lower time frame. I mean, the higher time frame. That is your priority. Is the higher time frame, right? So you might have it on where the higher time frame, right? On where the higher time frame might have an imbalance, but the higher time frame is going to go to where the higher time frame wants to go. You need to structure your entry off of the lower time frame. So, for example, let's say we have let's draw this out right here, a imbalance, right, on the hourly chart, right? So let's do like a line here and even imbalance here.
Yep.
You know there's an imbalance, but let's say we have buy side right above here and we just barely missed it. So what am I gonna do? I'm gonna look for this to happen right here, a lower time frame, or a tap into this imbalance, come back up, make a high, make a lower low, then make a higher high, and then switch the market structure, then go up higher. You have to look for structure changes in higher time frame imbalances. Do you know what I'm trying to say now? Do you get what I'm trying to say now?
Yeah.
That's your main goal. That's what you want to see, structure flips in lower time frame imbalances. I mean, small structure flips in higher time frame imbalances, right? So I'm going to go ahead and explain something right now. Let me go ahead and continue off. I'll show you exactly so that you have an idea of what I'm talking about, right? So, all right, what do I see here? Okay, clear sweep of buy side, right? Market structure shift down. Do we see this, gentlemen? Do we see this MSS to the downside? Do we? Hello?
Yeah.
Okay, good. So I am bearish. Where would I be targeting for sell side? Well, this looks like a market maker sell model. So I'm going to be targeting this right here, as well as this sell side down here. So let's go on the 1. What time is it? 12 p.m. Okay. 1 hour imbalance, holding very well. Okay, I like this. We'll see how this goes out. Is this, yeah, 12 a.m. Okay, I like this right here. Inducement. Okay, inducement. Here we go. So here you have an internal sweep, and we're forming a lower time frame order block here. So we need to wait and find out how this works out. We need to see how this works out, because I mean, this is London session. We gotta give it more time. Okay, bingo. So this looks like a nice purge model. Down to -4. Okay. See how price continues on here. Chop, chop, chop. Sweep, wait. Hit the hourly imbalance, and we're gonna find out how we go here. Market, wait. Where's market open? Hold up, time out. Where's market open? Where's 9:30 market open? Holy shit. 9 a.m. Okay, bingo. Okay, Jesus Christ. 9:30 market open, right here. Okay, bingo. Obvious high. Obvious low. 1 hour. BPR a year. Okay, let's keep it simple. Now, we're in a 1 hour BPR. What do I want to see? I would like to see structure off this 1 hour BPR. Look for a lower time frame structure shift to then take out sell side because we're in a market maker sell model. Okay, we'll see how this goes. Okay, we tap it. Take out sweep. Okay, pump the buy side. Now, do we have on the 30-minute chart? Do we see displacement down, Beer Pirate? Off the sweep.
Yes.
Mm-hmm. Here's a question.
Okay.
Off the hourly imbalance, off the hourly BPR, did we see a lower time frame structure flip? Did we?
No, I don't think so.
So, is it safe to look for shorts?
I'd say no.
Okay, good. It's not because we do not, again, we're printing higher highs and higher lows. There's not a single low or lower low created.
Yep.
So we're not looking for anything short related here. Okay. Let's go on 3 minute. Not 3 minutes, sorry, the 15 minute. See what we've got here. Price is accumulating. What time is this? 8:30 p.m. Okay, this is market close, so you have to wait till London session here. Let price do its thing. Okay. Now, after this sweep, we finally are seeing structure bearish, correct? Right, Beer Pirate? Look how we're displacing now. So, where's 9:30? Okay, so this is market open 9:30. Now, the following day, after we couldn't find an entry before, what are we seeing now? We swept buy side. Of course, this hourly, unfortunately, this hourly imbalance got disrespected, right? We're sweeping buy side, and we're displacing lower. Where is the draw on liquidity now, Beer Pirate?
I don't know.
Okay.
I don't know. I missed like the first 15 minutes if you're talking about liquidity, so I'm not sure.
Anybody know where the draw on liquidity is now? Anybody here know? Where's the draw in liquidity for that previous? Here, I'll show you guys right now. Here, where is it? Where's the draw on liquidity? Where is it at? There you go, Dan. Sell side, bingo. We swept buy side, displaced lower, going to sell side. Now, 9:30 market open. What can I expect? Price might retrace to this high. We do have LR at these highs up here, giving me what kind of feeling? Well, we might run that make a move down, but I think we're too deep right now in discount to then go ahead and make a run back up to premium. Induce price off of a 15-minute imbalance. See if we take out this high or not. We actually took out the fucking high. Now, here we go. Internal sweep. See what we got here. Lower time frame.
Okay. So I think I understand what you mean by internal sweep now, right? So that's internal sweeps between
so here, hourly chart.
Uh-huh.
This high got swept, right?
Yep.
Correct? External sweep. Right? This is a sweep of external liquidity. Sure. We just tapped right now into what? We just swept this internal. So the one that we created that swept the previous high got swept as well. Right? This right here.
Yep.
Got swept. Now, let's take a look at this on the hourly chart. Did we have any candle closes above here? On the hourly?
No.
We had no quote-unquote market structure shift is what it's called.
Okay.
Right?
Yeah, because no candle closed above that.
None. So
Yeah.
this is a sweep of liquidity. This is a textbook sweep of liquidity. Now, what would make me feel comfortable for shorts? If we inverse this hourly FEG right here. Then I'll be comfortable shorting down to where? The sell side down here. So let's let price do its thing to the hourly chart. See what happens here. Wait for us to inverse this. Hopefully we do. If not, we're going to continue higher. Nope, no inverse. No inverse. Ooh. Inverse. Okay, bingo. There we go. Now, what time is this? 11 a.m. Okay. We have what now? We now have inverse of the hourly FEG. We also now have a imbalance. We have LR. What would I like to see? Price maneuver down to sell side. So let's see if we can get an entry off of this. Oh, I don't have enough data point, and please don't tell me it's fucking sent me and erased all my things. Please tell me it didn't. I think it did. Motherfucker, dude. Hold up. Did it? Hello? Hold up. Bar replay. Here we go. I was right there. Okay. So 5 minute. Okay, bingo. So I can't go. So I can't go to the lower time frame because I don't have the whole like extra shit. So we have imbalance after imbalance. Now we have a 5 minute imbalance right here. This is a breakaway gap. I'll go over that in a different video. Where are we approaching? Sell side. Is it safe to short here, Beer Pirate?
Well, it did inverse that FEG right on the 1 hour.
Okay, good.
So we're targeting sale side.
Yes, we are.
Short, but I mean, as far as like the R&R, I mean, it doesn't look that great. I don't think.
Now, why do you say that?
Because, well, because the sales side is not, I guess, not that far away, and well, I don't know. I mean, your stops would be okay, I think. So you'd set the stop like right at the bottom of that imbalance, right?
So
maybe in the middle.
In this case,
yeah.
Realistically, the entry would have been, so this is 10:20 a.m. This would have been your entry. You know what's funny? I think we took this trade together in live call. I swear to God, I think we did. Internal sweep right here of these equal highs. The second we inverse this 5 minute FEG, there's your entry. Meaning this candle close right here. So it would have been stop loss above the high, and then take profit all the way down here. 2-to-1 risk reward ratio. And if you let price play out, you should get an entry down. And then here, look. So thankfully, we take out sell side. You're gonna see it happen in a few here. But let's hold on. Where the fuck is this at? Look. 1 second. So that's gonna, yeah, that's just same thing, but it's just gonna take us. But I wanna show you something real quick. Look at this. Okay, relax here. I'll just show you guys I got tapped. There you go, bingo. So 5 minute imbalance right here. Even though we inverse this 5, we induce price to come back up here, meaning we engineered some internal liquidity, swept it again, inverse this. This inverse would have been fucked because you would have definitely got stopped out because my stop would have been above the candle close of this inverse and we candle closed above it. But we continued dumping. So if I had to erase everything from scratch and show you from market open structure, go here, like 9:15, 9:05. Right? This is all the information we have as of now. How would I formulate an entry? Well, 1, equal highs already got hit. Equal highs already got hit, so that's going to get swept. But you need to see an imbalance correlating with those equal highs, right? So in this case, it'll be this right here. your imbalance right here. So you have equal highs with an imbalance, with a fair value gap. Meaning what? Okay, now it gets interesting because now since you have an imbalance with fair value gap, what does that mean? I mean, an imbalance with liquidity, what does that mean, Beer Pirate? You have a sweep of liquidity, and then you tap into a premium imbalance, which is a good entry for what? Longs or shorts?
Well, if you tap the imbalance, I guess you could short it.
Mm-hmm. So let's see what price does here. Sweep, tap. And then after that, we inverse and continue lower.
Uh-huh.
Now, how do we correlate this with a bias? Let me show you right now. Let's go ahead and erase this replay and go to now. So, hello, where the fuck is market? Okay. By the way, whoever listened to me when I told you to not be bearish today, look what's happening. We're pumping like a motherfucker. And I'm up 30% on my Microsoft calls, but whatever.
Nice.
Show you right now. Hourly chart. Let's go on NQ because NQ is a better look than ES, right? Okay. So
what exactly, I mean, what do you call liquidity? So when there's an internal sweep too?
So liquidity is just highs and lows. That's all it is. Highs and lows. That's all it is. So essentially, liquidity. Liquidity.
Uh-huh.
Liquidity. That's all liquidity. All that's liquidity. All of it. Every ounce of it is liquidity. Okay. Do you get what I'm saying right now?
Yeah.
All of that is liquidity. All of it is liquidity. What you're supposed to do with liquidity is you're supposed to incorporate it to then form your bias. Meaning, after a sweep of liquidity, you introduce fair value gaps. Meaning, after a sweep of buy side liquidity, you want to look for a lower time frame imbalance to get invalidated. So in this case, we sweep this level of liquidity right here. If I go to the 5-minute, what happens? We inverse the lower imbalance right here, meaning what? Okay, now we're bearish. So we inverse that FEG. Short entry, stops above the high. TP is first this low, and then second one's this low down here, then third one's this low down here. Then your final TP is down here, but that didn't get hit. So I'm gonna be honest, this will be your trade right there, right? So after we sweep buy side, remember how I told you guys about the imbalance video? When you sweep when you sweep a level of liquidity, that's where you're most likely going to see, if price is really bearish, a inverse of an imbalance in which you can then safely short down to where you want to have your take profit, whether it be there a level that's maybe perhaps LR or an absolute equal low, equal high, whatever it may be, right? You get what I'm trying to say now?
Yeah.
That's basically it, bro. That's basically all it is. So how do I form a bias, right? Bro, this market, dude, I want to show you guys a better example, but I can't because this is horrid. Let me show you guys at least a decent example I can possibly find. Okay, you know what? This one can do it. This one can possibly do it. Ready? Let's go erase right here. I like this one right here. Where's it? Let's go ADM. Right? ADM. Okay, ADM. Bingo. Buy side's a target, right? We have sell side down here. Correct? It's ADM. Oh, hey, I woke up. I want to look for a trade here. Let's look for a trade here. Let's see what we can find here. Okay, let's do that, Beer Power. Let's go see what we can find here, possibly in the market right now. Okay, hourly, bullish. Okay, 30-minute, bullish. Okay, hey, Beer Power, what's this? What is that, Beer Power? What did I just draw right now? You hear me? Anybody? Mikey, what did I just draw right now?
So that's an FEG that was inversed.
Okay, bingo. Oh, okay. What's this? And we're tapping off a 50-minute FEG. Okay, I like this a lot. Oh, I like this a lot. Take out this high, I'll be looking for longs. If we candle close above this high. Didn't like that. Didn't like that. More volume. Okay. $10. Stops below the low. Ooh. Take profit is a high. Let's erase this. See if it gets stopped out or if we take. Oh, no, run to take profit. Should at least. There's market open. There's take profit.
Fucking nice.
How did I do this? 30-minute imbalance, 30-minute inverse, holding its value. Okay. 15-minute mark or 5-minute market structure shift. I didn't like this one. I wanted this one. So when this happened, I went long, came back down, hit the inverse that we initially created, came back up, inverse down. Wow, sorry, holy shit. Inverse down here. We were tapping again this initial inverse on the 30-minute. Came back up. How did I know where price was going? How? Anybody know how I knew where price was gonna go? Anybody want to say it? I'll give you a secret. It starts with the letter L. What was it?
Liquidity?
That's it. Buy side liquidity. And I just showed you guys with a higher time frame imbalance, you look for a lower time frame entry. What do? You put your finger up your ass and you wait.
Yep.
That's all you gotta do, bro. That's all you gotta do. So, I would love to show you guys better examples on the lower time frame, but I can't because I don't have the fucking premium package. Because I'm not paying for that shit. I don't need a 15-second chart. But you guys get the idea. Let me close this for you and show you guys. 15. Even though we were in this range, I knew where price was going. Why? I mean, again, I'm not gonna lie. I correlated with ES. I knew where ES's draw was. I know that NQ wanted to go higher as well because if ES goes up, NQ's gonna go up as well. Okay, I'm comfortable in longing here to this level of buy side. Do you understand what I'm trying to say?
Yeah.
That's all you need to know. That's all you need to know. Liquidity is what's going to dictate you and give you everything. Bias, guys, I showed you. What I showed you right now is a more complex version of this. Why? Because I did it reversed. What you're supposed to do, essentially, is, oh, Halo, how do I trade this? Well, you're supposed to wait for level of liquidity to get swept and then an imbalance to form, and then you're supposed to get your trade off of that. Now, I did it the other way. I did it from an imbalance to a level of liquidity because I knew where draw was. That's for more experienced people. But when you just start doing this, wait for a level of liquidity to get swept, wait for an imbalance, and then you look for a long or a short. You get what I'm trying to say now?
Yeah.
That's what you're supposed to do. That's what you're supposed to do. Is be patient and wait for a long or short entry to come into play. Right?
Mm-hmm.
Level of liquidity, imbalance. Lower time frame structure switch, long or short. That's the secret sauce. Any questions, comments, concerns? Anybody at all? Everybody good here? Nobody has a single question, comment, or concern? Nobody? That's new.
Well, can you repeat what you just said?
Any questions? So, level liquidity.
Yeah. Lower time frame.
Imbalance. Lower time frame entry. Capiche?
Mm-hmm.
Perfect. Anybody have any more questions? Tax. Yes. Let me show you guys an example. Let me draw it out for you. Buy side, sell side. Higher time frame PD array like order block or FEG here. Oh. Sweep, market structure shift. Higher time frame imbalance, level of liquidity. Now we have a lower time frame imbalance possibly here. Entry short, take profit, sell side. And then you just do this, tap in to sell side. Capiche? Does that make any sense, gentlemen? Is it easy for you guys to understand?
Yeah, that makes sense.
That's all you need to know, bro. That's all this is. This is the magic behind all this fucking madness. That's it. That's it. Incorporate this in your trading and tell me how it goes. Tomorrow we're going to form models and show you guys how to go ahead and do proper models. Actually, no, tomorrow's not model. That's bullshit. What's tomorrow's lesson? Hold up, let me check. Tomorrow's lesson is understand. Oh, risk management. Oh, that's gonna be interesting. Let's see how many of you guys show up to that one. Go ahead and close this out. Let's see how many people join into that fucking call, bro.
I'll be there. I just woke up late.
Yeah. Oh yeah. Wake up late to the risk management. Watch how there be like 5 people at the risk management video. Watch that.
Risk management's good, man. I mean, that's something I need to definitely.
Oh, also too, just an FYI, for those of you, for those of you who are curious on why I said we're gonna be bullish or why we're gonna pump out open, Microsoft. That's why. Yo, guys, I swear on my mother's life, I'm not lying to you. There is other ways of dictating bias besides just SMC. I'm not even joking. I can tell you where NQ and ES is gonna go by looking at Microsoft and Tesla. I'm not kidding. Because I used to trade these before I traded SMC, so I know that these have a massive influence in the market.
Yeah, big time.
This shit is gonna fucking rocket shit, dude. Holy shit. I mean, I'm up nice.
If you don't mind, would you look at the live chart right now?
Which one? Yeah, of course, no problem. Yeah. This one?
Yeah. Okay, what time frame? So you're on the 5-minute, right? So I see. Well, there's like an imbalance in the 5-minute. It's pretty low, but what we just did was sweep the buy side liquidity, right?
We just took out. We just took out London highs right now.
London highs, yeah. Okay, so I mean, I had an entry because there's. Well, let's see. There's an inverse, or I mean, a imbalance on. Well, like the 1 hour. I mean, the 1 hour imbalance is huge. But basically, I took an entry because there's a 1 minute imbalance at the top here, and it tapped that, and then it broke above that, and then so the target was the London highs, but that's the buy side, right?
Yeah, that's buy side. London highs is buy side. As of now, it's buy side.
Yeah. Okay, so that played out pretty well actually, and then I got out at the top, but
yeah. London buy side is London highs buy side as of now, but ES might want to go a little bit higher. I mean, we just tapped midnight open right now. That's really what it was.
Midnight open. Okay. So what the actual buy side's the higher high right there, further to the left then, or
I mean, the thing is that this is London high, but this is also midnight open. So this is probably just gonna go ahead, might consolidate here, then might run that high later on. Or if anything, we have SMT on NQ and ES. So what you want to look for now is just like a 1 hour imbalance getting disrespected, essentially. So like in this case, since you have SMT, I mean NQ is still looking bullish. I'm telling you, bro. I think NQ hits the consequent encroachment of this weekly imbalance. So like the midpoint of it. But for ES, bro, like what I would look for in this case, do we have a 15-minute? Oh yeah, definitely. So I would look for this. Yeah, I would look for this. MSS to the downside, and then we might like this, and then come back up to here, and then come back down to like that. The only problem is that yo, we're sniffing the balls of London High right now, bro, and I don't like that. I don't think we'll continue lower. Honest to God. Oh my God, I'm up as fuck on Microsoft right now. Hold up. Oh yeah, dude, I'm up nice, dude, and Tesla's up nice as well. Oh yeah.
Nice. You got calls on both?
Yeah, bro. Yeah, I have Microsoft calls. I have weekly expirations that are up 40%. I have a month out expirations that are up 22%, and I have Tesla calls that are up 20% that are also 2 weeks out. So yeah, I'm up nice.
Nice.
I'm up nice on both of them right now. On all three of them actually. I'm up around like 8.6. Oof, yeah, that's nice. I might sell like a 10. Yeah, options, bro. I'm telling you, bro. That's my options is where I make most of my money, if not all of it.
Yeah.
I trade futures to hedge myself, to hedge my options plays, but my options is where I make majority of my money. But yeah, all right. I'm gonna end this stream right here. If you guys have any questions after watching the stream, please feel free to go ahead and ask me. I'm willing to answer anything you guys may have. All right. Love y'all.